Hi there, welcome to kneppyinvests. In a video I released 8th of July entitled How to Find the Best Small Cap Stocks. Towards the end of that video, I divulged my mission throughout the next few months. And that is to create a video on every single small cap company that achieves positive operating cash flow in their June Quarter Appendix 4C. I'm also quite mindful that all companies will be, or most companies will be releasing their half-year or yearly results in August, and I hope to do a video on every single small cap company that achieves positive operating cash flow for either the half-year or full year as well. Now, the whole reason I want to do this is because the best sort of small cap companies you can invest in are those companies that achieve operating cash flow positiveness. And here's the proof. This is a graph that was released in an article by Marcus Burns from Speria on Livewire on April the 22nd. If you want to have a link to that article, just look at that video I released called How to Find the Best Small Cap Stocks. I do have a link in the description of that video. This just shows you the performance over a 20-year period. Those companies with positive operational cash flow versus negative operating cash flow. Those with a positive operating cash flow have significantly outperformed the market, 872%. The benchmark is at 323%. And those companies with a negative operational cash flow have lost ground. In fact, over the last 20 years, they've lost 5%. And this should show you why those companies that have achieved operational cash flow positiveness are the best sort of small cap companies to invest in. On July 6th, the very first Appendix 4C for the quarter was released to the market, and the winner goes to Xref, which is not a surprise because this was the company that released the first, or one of the first Appendix 4Cs for the March quarter. I think they released that on the 6th of April. And not only was Xref the first company to release their Appendix 4C for the quarter, they were also highly operational cash flow positive. Hence, I'm doing this video to fulfill my mission. There are numerous things to be impressed by this company. I'll talk about some of the things that really impressed me in the next few slides. Xref is a recruitment technology company. That's my own words. And Xref itself is a reference checking and identity verification platform. The identity verification part is something they acquired in 2019 from Rapid ID. They have offices around the world almost, Australia, New Zealand, Canada, and UK. Most of the offices, or most of their personnel, are in Australia. And a very impressive client list. Zoom, Price Waterhouse, McDonald's, KPMG, Woolworths, and Airbus are just a select few of the very impressive clients they do have on their books. And it seems like that client list is growing. And some of the reports we have from the clients is quite impressive. So these clients are very impressed with what Xref is doing, and maybe that's a reason why this company is growing at a fairly good clip. One of the things that really attracted me to this Appendix 4C from Xref is this quote found in the presentation. Since November 2019, Xref's primary focus has been on preserving cash and reaching cash flow break even. It's good to see they know where their priorities lie. It's all about becoming cash flow positive, because if you can generate cash flow in your operations, that's actually good things, or leads to good things for not only the company, but also shareholders down the line. And the way Xref have done this is to look at the cash they're spending and rein in that cash. So not only have they decreased their cash outflows over the past year, those cash inflows from their business have also increased. So you have increasing cash inflows, decreasing cash outflows. And that is the reason why they have become highly operational cash flow positive when you look at the latest Appendix 4C. Xref was founded in 2010 by Lee Martin Seymour and Timothy David Griffiths, and both of those guys also are the largest shareholders of this company. Seymour has 17.4% of the company, and Griffiths owns 16.97%. Lee Martin Seymour is also the CEO. So this company is founder-led, and that is something that a lot of investors do seek out, founder-led companies. 70% of shares are actually owned by employees. So it does seem like there is some incentive for employees to grow this company because in the long run, they will benefit from this. Two of the other four main shareholders of this company are Net Wealth and Australian Ethical Investments. Net Wealth owns 9% of the company and Australian Ethical owns 8.2%. Ticker code for Xref is XF1. And the market cap of the company at a share price at 43 cents is $82 million. And when you compare that to what I'm going to show you when we look at their Appendix 4C for the June quarter, you might see some good value there. When we look at the revenue and operating cash flow over the trailing 12 months, which goes to the end of December 2020, revenue of only $8.4 million, and no doubt that's going to increase quite considerably when we look at their full year financial 21 numbers when they are released in August. And in the trailing 12 months, they were operational cash flow negative by 3.2 million, and we'll see a positive number there when we get their full year financial year 21 results released in August. And we know it's going to be positive because we can see that number in their Appendix 4C. Annual recurring revenue at July the 6th was 15 plus million. And if you do want further information on this company and their Appendix 4C, they released on the 6th of July. They also released a presentation that complements their Appendix 4C. I highly recommend reading that presentation. You do get a lot of information out of it. Before we get into the June quarter operating cash flow for Xref, just want to go back to the March quarter. And in the March quarter, I did pay a little bit of attention to this company because they had receipts from customers of 3.5 million and they were operational cash flow positive by $3,000. So I did put this company on my radar. I just wanted that bottom number, that operational cash flow positive number, to be a little bit higher. They also had $6.2 million of cash on hand. They also had a $5 million fully drawn facility with Pure Asset Management at 9.95% interest rates. So how have things changed in the current quarter? Well, now let's have a look at the June quarter operating cash flow for Xref. Now on to the June quarter Appendix 4C for Xref and straight to the operating cash flow. And I was quite impressed when I saw this. The market was also impressed. In fact, the share price rose 20% on the release of this Appendix 4C. Receipts from customers for the quarter, $5.9 million. And we know the receipts from customers for the full year simply because they do release this or those numbers in this report just next to that year to date, 12 months. And receipts from customers are going to be $14.8 million for the financial year 21, which is not the same as revenue. So you will see different numbers between revenue and receipts from customers. More than likely, revenue will be a little bit lower than receipts. But the most important thing here is found right down the bottom, and that is whether the company is operational cash flow positive for not only the quarter, but also the year. For the quarter, they were highly operational cash flow positive. In fact, $2.5 million positive. If you analyze that, if they can continue this sort of performance over the next year, that means that's around $10 million of cash flow they are generating in their operations. And not only were they operational cash flow positive for the quarter, they're also operational cash flow positive for the year at $1.9 million. They started the quarter with $6.2 million of cash and finished it with $8.2 million. And the reason I'm excited by that is because when you see cash increasing in the business through the operation, that means the company's management has a little bit more flexibility around what they can do with that cash. They can, do some acquisitions instead of raising capital, diluting shareholders even further. They can do or fund acquisitions through the cash generating operations, or they can do further research and development, do some new technology for existing customers, that sort of thing. And this is why I'm excited about where Xref is right now and where they potentially will be heading in the future. One thing I really like to do when I see receipts from a customer is just to see if receipts are growing through time. If a company can't grow their receipts, then you do have to question the business model. Fortunately for Xref, there's a very distinct growth in receipts during the past 5 years. They IPO'd on the ASX in 2016, and in their first quarter, the March quarter of that year, they had $460,000 of receipts. So this company, Xref, have grown their receipts from $460,000 in their first quarter to $5.9 million. If you calculate the growth rate per quarter, you do get 13%. If you have growth rates in revenue of a major company at 13% per year, you're going to be quite happy, but this is per quarter. The other thing I wanted to see here is, particularly because we had a massive jump in receipts from the March quarter to the June quarter this year, from 3.5 to 5.9. I just wanted to see if there's any seasonality in their receipts. So is there any quarter where Xref does see the greatest amount of receipts? If we go back to 2018 and 19, it does seem like there could be a bit of a seasonality when it comes to receipts for the September quarter, but not the June quarter. So there could be another upswing in receipts for the next quarter before we see it come back a little bit. That's a definitely possibility. Also calculated the growth rate in receipts over the past 4 years, just to weed out the first few years, just because I just wanted to see how they're growing if you take away that low base. So $460,000 is off a low base. If we take away that low base, they're still growing receipts at 10% per quarter over the last 3 years. Onto the charts for Xref. We'll look at two charts here. The first chart here is the weekly chart going back to 2016, just after they IPO'd. And the share price was a little bit higher than it is now. Nothing too exciting for the first 4 years or so they were on the ASX. In fact, the share price went as low as about 9 cents or 8 cents during the COVID-19 financial panic. Share price has recovered quite nicely, and we have seen a potential breakout in the share price in the last few weeks. So if you're just looking at the weekly chart, we could be seeing a breakout in the share price for Xref. And the very fact that this coincides with the release of their Appendix 4C, which is highly positive and operational cash flow positive, we could see the beginning of a long sustained uptrend in this company's share price. Now onto the daily chart. Over the past year, share price around this time last year was in the mid-teens, and we saw a potential move into an uptrend during the latter period of 2020. Really no news. In fact, they did get a price query from the ASX at one point. I think the share price rose 30% on one day on high volume, and they had to explain that share price rise. We did see the share price reach a high of about 40 cents in December. Happened to a lot of tech companies on the ASX, and then we did see share price then go down into, we'll say, a medium-term downtrend from then until a potential breakout in the share price in June of this year. The market did react positively to their Appendix 4C for the March quarter. Share price rose 16% on that day, not high volume, but that was a failed breakout. You can just see the share price after that just drifted a little bit lower or went sideways. Just prior to Xref releasing their Appendix 4C on July 6, we did see the share price rise quite quickly on low volume, albeit, but the share price did go from the high 20s to about 37, 38 cents on July the 5th, the day before they released the Appendix 4C. Share price rose 22% on the release of this Appendix 4C and has gone sideways since then and has broken above that high we saw in December when the share price got to 40 cents. That's very important. We might see the share price drift lower towards 40 cents. If it got to around 40 cents, in my opinion, that would be an almost automatic buy for this company, because I have no doubt, actually I do have doubts, but I think there is a good chance, a high probability, that the share price will be moving into an uptrend, particularly if they can repeat this performance in the September quarter. That would be a good sign that this operational positive cash flow performance of the company is sustainable. That is all I have for this first Appendix 4C June quarter of the financial year 21. Hope you've enjoyed this video on Xref. If you have any questions or any thoughts, make sure you leave it in the comment section of this video. Last thing I always have to mention is I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's all for this video. Have a good day. Talk to you later. Bye.